Okay, what is up, traders? What's up, tycoons? Super excited for today's video, coming at you with another update on natural gas. In this video, we're going to be covering UNG. We're also going to take a look at the leveraged ETF Boyle. We're going to go over some price targets, and then we're actually going to take a look at the price of natural gas itself, the spot price of natural gas. So that way we can have just as many clues as we can to help, really predict and understand some of the price action that we're seeing right now. UNG, natural gas, Boyle, all of it has just been a huge falling knife. And I know a lot of people's portfolios are hurt right now after catching this falling knife. So hopefully I can provide some clarity on some of the possible movements that we may see, whether it's to the upside or to the downside. You can be prepared for some of the different signals you can use to help spot entries and exits. And also, as I said, just really understand the price action. So I've actually put together a nice slide presentation for you guys with all of the charts. We're going to break that down. Make sure to smash the like button, subscribe to the channel if you guys are new, and we'll get straight into it. So we'll hop right into it now. And what we're going to be looking at, okay, is we're going to start off here with the UNG, MACD, and RSI signals. So if you take a look, you can combine both of these indicators together to really give yourself some, possible clues as to some of the further price action, right? So if you take a look, we have a high here and a higher high. So clearly we're making higher highs on the price of natural gas. We should see the relative strength of that following this. But if you take a look at our RSI down here, we have a high and then a lower high. So this would be a term known as bearish divergence. It's an indicator you could see some bearish activity in the future. All right, so first signal here, we get some bearish divergence, and then we also end up getting a MACD sell signal where this blue line here touches and then crosses back down below this orange line over here. Now, pay attention how it played around a lot right here and went up and down, up and down, up and down. So it's really good to look for another signal besides the MACD as to what it can possibly do. If you take a look at what the MACD is doing right now, it did curl above, which would be an entry signal, but it's doing something very similar to what it did over here, where it's really just chopping and, really just hugging that orange trend line. And if you take a look, the trend continues, right? So we're in uptrend here. And even though the MACD was curling around right here, that trend continued and we still pushed upwards. So, we're clearly in a downtrend right here. That trend may as well continue. All right, if we see the MACD just to really, chop and go up and down, up and down, up and down without some clear direction to the upside from that blue line. Now, there's also a term known as bullish divergence. We'll take a look at that real quick. So if you take a look here, we have a low, and then we've created lower lows pretty much in this entire area, right? But if you look at your relative strength index down here, we have a low, and then we've created higher lows. And I said that we need to hold this trend line, but the more times we test this trend line, and that we've been testing this trend line a lot, if we break this, we're going to come down to our support levels down here. Now, if you take a look, the support levels that we had on UNG in the last video were 904, okay, 850, and 822. And we're definitely testing those levels right now. We're going to go into a little bit of a deeper dive, but before we do so, I just want to highlight one more thing, okay? And that's the major Fibonacci retracement levels. There's 3 of them in specific you want to look at, especially if you're brand new to using the fibs. It's going to be the 61.8, the 50%, and the 38.2. It helps identify trend continuation versus trend reversals. So if you take a look, a downtrend would be a move down, a retracement up, and then a continuation downwards of that trend. And a reversal would be the downtrend move, retracement, a little bit of consolidation, and then you break through those retracement levels. That's how you spot the reversal. So since this downtrend has began, we've moved down, retraced up to our levels, continued lower, retraced up to the levels, continued lower, retraced up to the levels, continued lower. So if we do get some bullish action right now, these are going to be the price targets currently. Now, these will adjust as you take it from the swing high down to the swing low, and we keep creating new lows. So if we continue creating new lows, then these levels will adjust to that and go a little bit lower as well. But currently, if we do get some momentum, all right, 1353, 1509, and 16.66 are going to be your bullish price targets up above. These are areas where I'd be very, very cautious trying to go long if you're not already long, as we've had done a pretty good job of rejecting our major fib retracement levels. So, you could, wait for a breakout retest, all right, but there's a lot of work to be done. If we come up here to the 61.8, that's basically going to be a 100% move on UNG. Now, let's take a look at the price of natural gas and the actual price, spot price of natural gas itself. We had a gap down to fill right here. Actually, I want to show you that, guys, that real quick. This is UNG on December 2020. Okay, so this is December of 2020, and there was a daily gap down to fill. Now, these gaps, they fill about 90% of the time. The big question is when they're going to fill, and that gap was just above 860. Okay, and we actually just recently filled that gap, and it took about 2 years for that gap to fill. All right, 2, maybe 3 years. My math may be a little off there, but it's February 2023 now. So, it took a very long time for this gap down to fill, but I think that that's what's been drawing the price of UNG down is we've been coming down to fill this gap. Now, this is also the all-time low, all right? That's our support level of 822 on UNG. If we go back to the first slide, you can barely see it, but this little blue sliver right here, that was that daily gap down that we had to fill, and we did eventually end up filling it. It just took years for that to fill. So that thing's been like a magnet, really been drawing the price action down of UNG. Now, if we take a look at the price of natural gas itself, the spot price, all right, we can still use those divergences and those MACD signals to really give yourselves some inference into what we do, right? So you see here, we're making higher highs, right? And then on the relative strength index, we're making lower highs. We combine that with a MACD sell signal, and then we get a big move to the downside. Over here, we're making lower lows on the price of natural gas, while the relative strength index is making higher lows. Then we combine that with a MACD entry signal, and we get a sharp move to the upside. Over here, we're making higher highs, relative strength index making lower highs. We get a MACD sell signal right over here. Again, notice how it's chopping, but during that chop, it tends to continue the trend, right? So even though it's chopping right here, we're still making that trend. And we got multiple sell signals technically by the crossover. And there were pullbacks, but ultimately we continued that trend upwards. Right here, we're making higher lows on the RSI, lower lows on the price. Combine that with a MACD entry signal, and then we get a sharp move to the upside where we start making higher highs and then lower highs on the RSI. Combine that with a sell signal, and then boom, we get a big move to the downside. Over here, we're making lower lows while the relative strength index is making higher lows. We get a MACD buy signal. Notice how the MACD is chopping right here. And then, the trend continues and we keep trending in a downwards direction. So it's really about combining, the signals together, because they're not always going to work 100% of the time. But when you see 2 or more signals aligning together, that can give you some further confidence. And you guys get the point. Okay, I'm not going to go over the other divergences right here. Well, actually, I will. Okay, so this trend line right here is going to be really important. This is our bearish divergence trend line. We want to break this trend line if we do start getting a rally. Okay, we really need to break past this trend line ultimately for, to see price continue higher. Otherwise, we're going to get rejected there. We've rejected it a couple times on the RSI. And so, pay attention to the RSI. If we do get some type of a rally, that's an area that you want to pay attention to. Now, look at the MACD. It's curling up, but it's chopping a little bit. Remember, whenever the MACD is chopping, that trend usually continues, right? You may see some short-term fluctuations, but that trend ultimately is going to continue. Now we do have some bullish divergence forming, right? If you take a look from this low down to here to this low, and we have a low here and a higher low here. So we definitely have some bullish divergence forming. We have the MACD trying to curl up, but it's chopping for now. No clear direction on the MACD. But we'll go ahead and highlight the big prices and the support levels on natural gas itself. We just broke our 279 support level. That's all the way back here from May of 2021. And it was also prior resistance in December of 2020. So we just broke through that support level. 243 is going to be the next support level on the price of natural gas, and then as well as 2.2. These are some levels that we tested here, here, and here as well. And then 2.43 is going to be a level we tested a few times in the very beginning of 2021. So, if this trend continues, this is where we're going to see the price of natural gas going. Over here, the next one, we're going to look at UNG. We're going to go over a possible bearish scenario real quick. So this is the scenario number 2, the more bearish one. And then we have bearish scenario number 1 right here. I'll explain these. I haven't really gone over the Elliott wave theory in my natural gas videos before, but essentially what you're going to be looking at is, we're looking at a 3-wave move to the downside, this larger ABC structure in black. And wave one, okay, and wave three, those are always 5-wave impulsive moves. Now, this last C wave has been a little bit hard to read, so that's why we have two scenarios. But if you take a look, we got a very clear 1, 2, 3, 4, 5 move to the downside. And after completing that, we got our ABC correction wave. Now, your wave two, okay, your even number waves, those are always going to be correction waves, and those are, identified by a 3-wave structure, right? So you get an ABC correction, and then we got a 1, 2. Now, this has been an extremely deep 3-wave that's targeting our support levels down here of 822 on UNG. And UNG is just collapsing even while everything was rallying yesterday after the FOMC meeting. UNG is still underperforming the market. So, we may be getting some type of a bounce here around 822, right? And, that could, we could get that little bit of a bounce, but your target for these, right? So, your wave C, all right, is going to be the 1.0 extension of your wave 1 to wave 2 right here. So the AB extension. So if you take a look, that actually gives us the price targets right here. The 1.0 extension is going to be 7.52. And if we break past the 1.0 extension and we try to head towards the 1.272, that's going to take us all the way down to 287. Now, that's extremely bearish, but I do think that 7.52 honestly is a really realistic target, for this ABC extension. And I do see that as a high possibility that we could come down to 752. But that doesn't mean we can't have some type of a bounce for a wave 4 structure up. Now, this is bearish scenario 1 right here. And this one is, the less extreme bearish, right? So we have the original 1, 2, 3, 4, 5 down, followed by an ABC correction with our 1 down, our 2 up, our 3 down right here at our right around our 904 support level, and then we bounce up, okay, and this could be a very short wave 4, and then wave 5 would complete down here at 752. So if we don't find that support at 822 here soon, I definitely see 752 completing, and ultimately we would end up looking for some type of a bounce right around 752. Hopefully we could get some, clarity off of the MACD and maybe the RSI, but that's definitely what I'm paying attention to and looking at right now. Let's go into Boyle. Okay, so Boyle did a really good job of, not only showing how we reject the major fib levels, but it also did a fib reversal, right? So if you take a look, again, the reversal is when you come down, retrace, and then you consolidate a little and break through those retracement levels and create a high and then a higher high. So we have a high here connected down to our swing low. You see we move down. We do come up above it, okay, but ultimately we pull back down, consolidate a little bit before breaking through and making that high and higher high. So, this is a great example of a fib reversal. We do see that we had another rejection here, okay, afterwards, after we made that new high, we created a new high, new low, retraced up to our 50% retracement level, and then continued that trend. I've got some bearish price targets right here on Boyle. Now, Boyle is already at all-time lows. If you take a look at UNG, the all-time lows was 822. Boyle is already at all-time lows. So I've used the fibs here to give us some price targets to the downside. We had a big support level at 795 that we really consolidated around, but most recently we flipped it to resistance and rejected it twice, 2 days in a row. So below there, we could be heading down to 321 on Boyle. All right, so 321 is going to be the next big support level. I'm not saying we have to go there anytime soon, but if this bearishness continues, then that's where we're going to be looking at for the downside as a major support level. Now to the upside, your bullish price targets are going to be your Fibonacci retracement levels, right? So we have our swing high connected down here to our swing low. If we do get some type of a bounce and a retracement, not only do we need to break these major resistance levels that were prior support, but the major levels of resistance we need to pay attention to is going to be 28.85, 24.53, and then 20.21. Those are the 3 Fibonacci retracement levels of resistance. And, we need to be cautious going long up here because ultimately we could continue that downtrend, or we may end up, consolidating and breaking, right? So you'd rather look for kind of like a break and retest for an entry to go long up above here. And I definitely wouldn't recommend just, trying to start a new long position at these 3 major resistance levels and wait for confirmation if it's going to break out to the upside or if it's just getting a healthy retracement for a continuation lower. That's it for today's video. Hopefully you enjoyed it. If you did, again, make sure to smash the like button, subscribe to the channel, and I'm out.